So the crypto market is completely and totally right now facing this absolute and total meltdown. Bitcoin has dropped below 30,000 and it's likely heading towards 20,000, potentially even less. And I've heard numbers as low as 11,000. I'm thinking 20,000 is hopefully the bottom. That's kind of where I think it's the bottom is where it's going to go. We'll talk about that a little bit later, but it could get less than that. And fortunately, for those of us who are real big Bitcoin lovers like myself, there's this current fear in the crypto markets, and that's starting to push capital that used to be in a lot of the altcoins, and those are going into Bitcoin instead. And that means that things like everything from, Ethereum, Solana, Cardano, all these other big coins and big alts are dropping even faster than Bitcoin is as the funds move into Bitcoin. So even though Bitcoin is down considerably, it's nowhere near what's happening with some of the other coins because investors are hitting this panic button all over the place. In all, so far since April, we've lost over $1 trillion in the cryptocurrency market that it's just completely vanished, completely vanished. And the pain isn't even close to being over yet. So we're going to get into all of that today on Renegade News Live. Welcome back to Renegade News Live. I'm your host, Glenn Kowalski. Every week on this channel, we discuss topics about breaking free from the system, paying less tax, and living anywhere in the world that you want. Every Thursday, we go live at 12 p.m. Panama time. And that could be changing. So you want to watch for it. We might be changing the day. As you can see, we're a little bit grainy today and the resolution's a little bit off. That's because we're in our different remote office. We're actually building the studio right now. We're constructing the studio here right now, but we were planning on going live with natural light. I have a big window right in front of me here, but it's storming and dark as could be outside. So we're not getting a whole lot of natural light. Notice that our internet connection here sometimes isn't as reliable as it is in our main studio. So we might change up that day a little bit. We're going to see how things go. So just be watching closely for the updates. But for now, Thursday at 12 p.m. Today, we're going to be discussing the crypto meltdown. We're going to talk about what's caused it and really what you need to do about it. We're going to be streaming live to Facebook, to YouTube, and to our Renegade community. And if you're not already in our Renegade community, it is a free community called the Renegade Movement, where we discuss a wide variety of topics that are personally, financially, and location. Self-sufficiency, offshore banking, offshore business accounts, and other topics of interest looking for more freedom and mostly independence. You can see the address on the screen right now. Go check it out. It's completely free to join. And let me know that you're watching by commenting on either YouTube or on Facebook. And I'm going to try to keep an eye on those comments and questions during the live. And I'm going to try to get back and be able to answer those as we're going through it as well. Also, I just want to state for the record that nothing that I'm saying today should be taken as financial advice. I don't know your personal situation. I'm not a financial advisor. And you probably shouldn't take my advice about anything. Just kidding. But just do your due diligence and make sure that you look into everything I'm saying, form your own opinions. Nothing is personalized advice for your own personal situation. So let's just kind of dive right into what's been happening, what's been going on, and what's causing this, because the crypto markets truly are a disaster. And one of the biggest right now has been a recent collapse it has been caused by the extreme fear that was created by the recent collapse of Luna. And Luna was a cryptocurrency that was used to manage a stable coin called Terra USD or UST coin, which was a cryptocurrency specifically meant to hold its value against the US dollar to remove some of the volatility that are inherent in cryptos. Obviously, cryptos have a lot of volatility that makes it very difficult to plan, especially if you're trying to run your business on it. That's one of the things that I've really noticed with having a business that uses cryptocurrency. Because of the volatility, it makes it harder to plan cash flow. So essentially, the goal of crypto and UST in this UST was to peg a stable value against the US dollar. So they call that pegged. Now, the problem is that it didn't. On the 9th of May, after basically 18 months of really holding its value really well against the US dollar, it became what's called unpegged. So which means it became uncoupled from the value of the US dollar. And that coupling, excuse me, it triggered this response that would ultimately crash not only UST and Luna, but also contribute to what's going on in the Bitcoin market and in the broader crypto space because of this major downturn of 99.99999%, effectively wiping Luna off the face of the earth, has also spread towards the broader crypto market. And so the reason this happened, so I'm going to try and keep this really simple. It's a little bit complicated, but Luna is not pegged to the US dollar because of holding US dollars as a reserve currency against it. So if you look at a coin like Tether, for example, the reason that it's supposed to be pegged to the US dollar is they're supposed to keep one actual US dollar for every Tether in existence. That's the way it's pegged. With UST and Terra and Luna, we'll call it Luna, that's the most common name, it's done via an algorithm. They keep that pegging using a software code that is meant to balance out the value of UST against the US dollar. So both UST and Luna exist on a blockchain called Terra, and there's this nonprofit called Luna Foundation Guard that watches it. And they use this algorithm to be able to keep the balance. But rather than using the reserves like Tether, by partnering the coins together, the two coins, the UST and the Luna coin together. And so basically what happens is every time there's a UST coin minted, there's an equivalent of $1 worth of US worth of Luna that's getting taken out of circulation or burned. So basically what that means is that if Luna was trading at, say, $80 per token, using the market as the guide, so the market drives the price of the token up and down, just like other cryptos. If Luna was trading for $80, you could then burn that or remove that Luna from circulation and get $80 worth of UST. Then on the other side, if UST fell to like 99 cents, so it was no longer pegged to the dollar and dropped to 99 cents, you could sell it for $1 worth of Luna. So in that way, they evened each other out. They were meant to kind of even each other out by buying and burning each of these coins in parity with each other. Now, there was a problem built in that if people suddenly stopped burning Luna, the whole story would fall apart, because you have to, in order to mint new USTs, you have to burn Luna and vice versa. But they had a backup plan in place for this effect. What they did was the Luna Foundation held $3.5 billion worth of Bitcoin as a reserve, so that if the price of Terra USD fell below the dollar, and it didn't come back on its own through market activity, they could actually sell their Bitcoin to buy more Terra USD and drive the price back up. So if it dropped to 99 cents, they could buy more of it. That would drive the price back up to $1, and they would remain parity. And that would keep the balance of UST equal to $1. And this worked great for 18 months. Luna and UST was a top 10 crypto, huge reserves, a huge market. But the problem is there was a massive sell of UST. And in an effort to bring that back to parity, the Luna Foundation Guard had to sell off their Bitcoin to drive the prices back up. And because it was such a large amount, it caused these vast amounts of Luna to flood the market and come on the market. $2 billion worth of Luna was suddenly printed on the market. Now, we don't know if this sudden selling that triggered this event was due to a crypto market volatility and people just got scared and started selling, or if there was an intentional attack on Luna. And there are a number of number of conspiracy theories about how this might have worked, and I'll talk about that a little bit later. But for whatever reason, this sudden selling of this UST caused a sudden buying of Luna with this reserves of Bitcoin. So the next issue is that Luna had a limit of only allowing $100 million worth of the UST to be burned for that Luna per day. So that caused the price of Terra to immediately fall to about 91 cents. This then triggered a panic where both Luna and Terra started building off each other. And because the values of each started dropping faster and faster, it caused this death spiral to drive the price of Luna from where it was, I think, at $85 down to virtually nothing. It's like 0.00, I can't remember how many zeros, 1 cent. So basically fell down to nothing. And at the same time, because there was now $3.5 billion worth of Bitcoin reserves, the values of that, because Bitcoin was already dropping, it was no longer 3.5 billion. It was dropping rapidly with the market. So there was actually less than 3.5 billion there when this event actually happened. Now, there is a number of conspiracy theories about what this happened. One speculator said that someone deliberately dumped $350 million worth of this UST so that that would force the foundation to upload its Bitcoin and cause the price to drop. And that they would and then they would then short the market. They estimated that short would have made them close to $1 billion. I don't know whether that happened or not. Nobody does for sure. Whether we'll ever know is questionable. I doubt we'll ever really know what happened. But the fear that was created by this event actually caused Tether to have some issues with their values as well. They managed to bring it back. But the entire crypto market space, it was already facing fear. Some of the stuff that we're going to talk about a little bit later helped to cause that fear. That fear just moved more people out of crypto. People started panic selling more and more across all crypto coins. Less people wanted to come into the market and get involved because they're just, when something like this, when a coin loses 100% of its value that quick, it just causes fear and ripples throughout the entire market. Hey, Corolla, it's great to see you in here. Awesome to see you. I haven't seen you for ages. So good to see you. Kind of moving on. So that was probably one of the biggest triggers, but there have been a couple of other smaller triggers. One of them that my personal opinion is also driving this fear is what's happened recently with Coinbase. And it's something that really shouldn't have caused this fear. It's something that experienced crypto users already know. And we've always advised here at Renegade News, and anybody who's smart with crypto has always advised that you keep your crypto in your own wallet. And if they're not your keys, they're not your private keys, they're not your coin. Well, in a recent report from Coinbase, they admitted finally that in the case of bankruptcy, that the Coinbase users who have their money on their exchange and not in their own wallet could actually lose their coins. So if you bought coins on Coinbase and Coinbase goes bankrupt, you could actually lose those coins. Now, Coinbase does have a wallet, and the wallet is safe because the wallet is your own coins. I'm talking about money that's actually kept on the exchange, which is something that I never recommend you do. Keep only money on the exchange that you plan on exchanging. And Coinbase they're saying they're not in any risk of bankruptcy. So I don't want to start any rumors that there's any risk of bankruptcy. They're a strong company. They're very, very large in the market. But it does bring to the surface that if something happened and they did go bankrupt, they could take their customers. Now they're holding about $256 billion worth of customer assets. And all of those assets could be up for grabs if they ever went bankrupt. And like I said, there's nothing really surprising about that to us. We know that you should always hold your own coins, but in the general market, a lot of people don't understand that. And a lot of people keep their coins on exchanges. It's a lot more convenient. It's easier. It works a lot like a bank account where they kind of handle the backups for you. They handle the keeping the keys so you don't have to worry about those kind of things. And it makes things very easy, just like you were dealing with a bank. Unfortunately, those banks, the exchanges, aren't backed up by FDIC insurance and other insurance. I don't have a whole lot of faith in that insurance anyway. That's not the topic of today. That's something we've talked about in other videos. But just be aware that you don't want to keep your coins there. Nothing's actually changed. But I did want to bring that up because, in my opinion, that news event, and I've seen this in the market, has contributed to people staying out of the market and just being scared of crypto in general, which they already were, and adding to all the other events that have been going on to increase the fear and therefore have people exiting the crypto market, panic selling more, driving the market down slower, stopping new money from flowing into the crypto market, and just sort of perpetuating this entire collapse that we see going on all around us. So the last one that I kind of want to talk about today, and the last thing that's really going on right now, is that the crypto market does not work in isolation of everything else, right? It's part of the market, and it's part of the greater geopolitical and market environment that we're working in. It's just a part. And right now, like I said, it's not just crypto right now that's down. Right now, pretty much everything sucks. The NASDAQ, the Dow, the S&P are all a disaster right now for a variety of different reasons. Again, that's outside of the topic of today, all the different reasons for them being out. But each of them has been seeing record falls all throughout May and really longer. And unfortunately, what's happening is that Bitcoin is seeming to be correlated to the stock market right now. And I know a lot of us thought that it wouldn't be, that it would actually be kind of a hedge against the stock market. And I think maybe in the future that could happen with cryptos. They could end up being more of a hedge, similar to gold. So similar to being a store of value like gold. But right now, not a lot of people understand the crypto market. It's in its baby stages. And nobody really knows how it's supposed to react. So therefore, investors get fearful just from the general market collapsing, and it translates into the crypto market. And right now, they do appear to be very correlated. Whether that's going to stay or not is yet to be said. But there's a lot of reasons that this overall sort of market kind of stinks, and they're all affecting Bitcoin. There's the rising inflation that's going down, and that's causing people to need their money, which causes them to sell. A lot of people who are hodling, for example, may, because everything's more expensive, might be forced to sell. We also have interest rate hikes that are meant to kind of halt that, but that puts a big pressure on selling as well as interest rates go up and people look into other avenues for their capital. There's also the entire geopolitical instability right now. We have a Russian war, and that's changed up the entire market, the entire commodity market. Commodities are in short supply, and that's led to inflation. And because that inflation is existing, that has also lowered the crypto value as well. So there are a number of things going on. There's a number of things right across the market. The big, like I said, were things like the Luna collapse. That accounted for a ton of the fear. There's people starting to just learn in general more about crypto, and that should be alleviating a lot of fear, it's also creating a lot of fear. The Coinbase release that in a bankruptcy they could keep your coins. That's a part of that piece. People are aware of, crypto's going crazy. Let's go buy our Lamborghinis. Invest in crypto and buy Lamborghinis while it's going up like crazy. But then they see that if the exchange goes bankrupt, they could lose their funds. That puts fear and slows down the market. And then, of course, we have all these geopolitical issues. The Dow is down. The S&P, all the indexes are down. Interest rates are going up. There's war going on, and all of those things are driving the market. So what can you do about it? How can you be prepared and sort of protect yourself? And it's going to be painful. A lot of us are feeling the pain right now. But the first thing you have to do is not panic. It's panic that's going to drive the prices down further because the rest of the market's panicking. But for you personally, by panicking, you can't make the right decisions that you need to make. You got to stop back, take a deep breath, relax, look at what's going on, and remember that this is not the end of the world. They're around the corner, and we're going to talk about that in a second too. But you want to get your mindset into a place where you can be ready for that next bull market when it comes around. And you can't do that if you're panicking and you're panic selling. So the first thing I'm going to say, if you're already in the crypto market and if you already hold coins, if possible, hodl right now, hold on to them. Don't sell, because that bull market is going to come around the corner. Now, by don't selling, there are places where you are going to fall up faster than others. I feel that Bitcoin is still a safer store of value than especially a lot of the really speculative alts would be. And a lot of them are going to have a huge free fall still coming. And you have to look at your own personal portfolio and decide, well, maybe you've already taken a loss in XYZ coin, but the losses are going to be bigger, and you may want to consider moving into Bitcoin or something more stable. Or if you believe the market in those coins are going to get worse, and I know I own some coins that I believe are going down, so I've done this myself, and you want to be a more active investor. I should put that caveat in as well, because this strategy I'm going to talk about will mean you have to keep a closer eye on the markets and what you're doing. But if you want to take a more active role and you want to protect yourself and you believe that your particular coins are going to drop in value, you can move some of those alts into a stable coin like Tether so that you're ready to buy back the coins quickly at the bottom. So you could sell into cash, but selling into cash has way higher fees, and you have to get back into the market again. And as you know, if you've ever bought crypto, the hardest thing is getting in and out with fiat. So by keeping your coins in the market, in a coin like Tether, that gets you ready where you can buy in an instant the moment you think that you've hit bottom. And you want to be ready for that, because if you get into fiat first, the bull market could come along, and it's going to hit fast and furious when it does. And that could mean that you miss out and you end up being in a worse position than if you've just held on to your coins. The other caveat I'm going to put out there right now as a warning, though, is as we saw with Luna and the stable coins aren't a guarantee either. So if you're going to follow this strategy, make sure you do, just like everything else you do in the crypto market, make sure you only play with stuff that you can afford to lose. I feel pretty good about Tether. I've talked to some people in the industry, and overall, we feel pretty good about it, but there is certainly a risk, and the last Luna crash sort of proved that. But by being in something like that, you can be prepared to hit bottom. But like I said, you have to be prepared to move and be watching it all the time, because once it hits, it could hit really fast. And if you sell a lot of your coins into Tether right now, that probably means that you're going to be selling at a loss, which means you're taking a loss. Whereas if you held within your coin, you're not actually taking the loss yet, and you can wait for the higher highs, the higher value. So hopefully I was kind of clear about that. Like, by going into Tether, you are taking the loss in whatever your altcoins are, with the sole intention of buying in at a lower place. If you don't want to be active enough to do that, you're better off just kind of holding right now. And it would help to know when that next bull is going to come around. And the question is, like, nobody really knows when that's going to happen. We need to kind of see some positive signs coming from somewhere that people are getting comfortable in investing again, because right now people are just terrified, and it's becoming more and more obvious that turnaround is going to take some time. So you have to kind of be really, really cautious, especially like if you're not in crypto right now at all. So kind of moving away from that topic of, if you own crypto and sort of how to protect yourself there by hedging in stable coins. But if you're not in crypto at all, and if you're thinking about putting more capital from fiat or wherever into it, you want to move really cautiously. I think you could probably wait a little while longer for the market to bottom out. But like I said earlier, there's not going to be a whole lot of warning when that actually turns. So what could happen, and what we've seen happen to a lot of investors in the past, is you could quickly lose even today's pricing. So I remember the last time Bitcoin had a crash. A lot of people waited for the bottom, and they waited for the bottom, and they waited for the bottom. All of a sudden, the bull market hit, and all those times that they were waiting for the bottom got blown past, and they ended up having to buy at a much higher value. So you don't want to be one of those people who say like, oh, I wish I got in at under 30K because you're waiting for a lower value. We're under 30K today. So if you want to enter the market, you might want to think about doing it sooner than later. And yes, Bitcoin could drop to around 20K or even lower. I expect it to be, like I said, 20 to be the bottom, but it could also move up quickly. And when it's worth 100,000, which I think we're heading towards in the next bull run, you're not going to care if you bought it at 29,000 and missed the 26,000K bottom, but you are going to hate it if you can't get in and buy until it's 40. So that's why I always recommend in any market, whether it's a bull market or a bear market, to dollar cost average. So get into the market, feel your way out. Get into Bitcoin now, as long as it's with a low amount. You can afford to wait out the loss on, so you don't have to panic sell. I'm not actually calling it a buy unless you don't have any, because I think it's time now during this bear market is a good time to kind of learn about it. As long as you're not dumping anything that you can't afford to hold on to. Like I said, I mean, if you put in $500, for example, and it drops to $300, you're not going to have to panic sell for that $200. And then you can wait for that $500 to turn to $1,000 or $2,000. Now, Bitcoin is still a speculative asset, and along with the entire crypto market, it could actually drop to zero. So I'm going to throw that out there. We saw how fast it could happen. I personally don't expect that's going to happen with Bitcoin. I think at this point, it's a fairly safe bet that it's going to take a long time for it to go to zero. And if it does go to zero, it's only going to be because other coins surpass it in value. I can't see the entire crypto market disappearing. We're just too far into it now. But I mean, obviously I can't make any promises on that. So so we can't really make any of those promises. So never invest what you can't afford to lose. That's sort of the main thing that I want to say in the main warning. And just to kind of summarize what I just talked about, you want to be cautious. But you do want to get into the market because the market's going to be around forever. You want to be in a position where you're prepared to make a move fast when that next bull market comes along. So whether that's putting it in something like Bitcoin that's relatively stable, yes, it's down, but it's not down near as much as the other coins. So that's where I feel that my personal opinion is a lot of your crypto ownings should be in Bitcoin right now. Like I said, I'm not making any financial advice. That's just my personal feeling. Tether, stablecoin like Tether, before I would say, yeah, absolutely, get into that. Now, obviously with Luna, my perspective has changed on that a little bit, but I still personally feel pretty good about it. And it's a way that you're ready to move the minute that bull takes off. And I think that's the key. If you want to use crypto in the future, if you want to make money on crypto, if you want to become independent, if you want to become one of the independent people who's running your business on crypto and using crypto privacy and getting all the other advantages of crypto that we're not talking about today, that wasn't what we're here for, but you know what those are. If you want to get that, now is a good time to start putting some into the market. I think we are heading for lower lows, so you definitely want to be careful there. But if you're dollar cost averaging, putting into things that are more stable, I would definitely be getting ready so that you're ready to make the moves when that next bull comes along and it's time to make the move. But whatever you do, whatever you choose, when you try to decide to get in, crypto is only really one small part of an independent strategy, and that strategy that you are going to need to break free from the system to survive all the chaos that's going on in the world, from mandates to taxes to a failing economy to dollar collapse, which is also on the horizon. It's up to you to take responsibility. It's up to you to be responsible for yourself and for your family, and make a plan to become more self-sufficient, more wealthy, and more control of your life and lifestyle. So continue watching Renegade News. Subscribe right now. Continue watching Renegade News live every Thursday at 12, unless we change that. But that's, for now, it's Thursday at 12. We have some new cryptocurrency experts on deck. I'm trying to get a good friend who's just an amazing trader. We're trying to align our schedules to get him on as well. And we have self-sufficiency experts that we're talking to. We have a bunch of experts coming in, so you don't have to listen to just me talking. We're going to try to move to more of an interview type of format so you can talk to some of the best people in the industry. So subscribe right now, and we're going to see you next week right here on Renegade News Live.